Hi everyone, welcome back to Be Rich. It's me, Vinod, recording remotely from Singapore. Today, I wanted to take the opportunity to talk about the finance sector in the US, and tomorrow I'll be talking about the communications. I thought since the markets are closed today and tomorrow that we will take this opportunity to dive into specific companies and see if these are the companies that should be getting into our watch list and see forward, looking forward, if we should be investing in these companies in the long term. Today, I had picked the finance sector because it's an important sector and there's a lot of value being seen in this sector for the simple reason of what is happening with Trump and the tariff wars he's raging on. Friday, he announced that he's spoken to Tim Cook previously and he's urged Apple not to look at manufacturing outside the United States, and if they are keen on manufacturing outside the United States, that he plans to slap them with a 25% tariff. This is not only Apple, he's also said this to Samsung. And in the trade war front, he has again gone after the EU and said EU has been very unfair to him and the Americans, and he is slapping another 50% tariff on them. It's rather strange after what happened with China, the way he had to take a U-turn finally and come back to his senses and relook at all the numbers and tariffs and lower it again, giving much relief to the market, pulling the market up. This announcement, what he's done on Friday evening, has again stoked fear in the market, leaving traders perplexed, and again the market has gone negative. Gold has again surged to $3,300 when I last looked at it, and of course the dollar index has pushed the dollar back below 100 at 99. The rupee to dollar is still at 85, so this is where we stand as we are looking at it on Saturday morning while I'm in Singapore. Should you be worried about this? Should you not be worried about this? I leave it up to you. But looking at the track record, he seems to be very unsure what he really wants, the president, and he seems to be going seesawing back and forth on these tariffs, leaving us rather confused as investors. But fortunately for us, we are value investors. We are looking at horizons of 5 years, 10 years plus. And when you look at 10 years plus, Mr. Trump would be long gone, and America would be in a different place and a different time 10 years from now. So the question begs, are these companies we're looking at, are they good? Are they sound? Are they making justified business moves that deserves our attention? And are they fairly priced in the market? And should we be looking at investing in them at now, or at least keeping them in our watch list? The two banks which I want to talk about today are Wells Fargo and JP Morgan. Both of them are big banks. They're doing relatively well, all things considered, but both of them seem to be undervalued by metrics if you look at it in the market. I want to first walk through what they've done in the last quarter and then how their numbers are looking. Then we will dive into towards the end of the video to see if they should be something we should consider right now, or at least have it on our watch list. First is Wells Fargo. Their revenues have been down year on year, and the net income has been up by 4.8 billion year on year. The earnings per share stands at $1.39 per share. Their net interest income is down by 6%, while their non-interest incomes are up 6%. Segments which they're mainly focused on is consumer banking, where they're down by 6, commercial banking they're down by 3, and corporate investment banking they're down by 2, while in wealth and investment management they're up by 8%. The return on equity is up by 11.5% from the previous year, where the debt stands at 1.04 and the interest coverage is good. But unfortunately, in the Wells Fargo, we could not really ascertain the free cash flow, though they have strong liquidity at $382 billion. What are the red flags for Wells Fargo? Well, a few years back, that is 2016, they got caught in a scandal, which was a fake account scandal. For those of you who do not know about it, I urge you to Google it and read all about it. In this short video, I really cannot dive into that, but those constraints, regulatory constraints, are still hanging over them while they're trying to manage this current scenario with the tariffs. And the other thing which is also very sensitive towards is, of course, the interest rate cycles. Like all banks, the Fed's interest rates has a profound effect on their business and their banking. So that sensitivity is also there. And like I said in the onset of the video, tariff and the tariff war is also taking a huge toll on them. The price to earnings, which is the PE ratio, stands at 13.04, while price to book is at 1.48, which is almost at 1. The PEG is interesting at 0.8, which shows it seems to be undervalued at the market. So if you're looking at it long term, there is a reasonable moat in this business, and they seem to be undervalued currently in the market. Flip of it, let's look at JP Morgan, which is run by Jamie Dimon, JP Morgan Chase, that is. And the net income is up by 9% year on year. The EPS is at 5.07. The revenue is up by 8%, standing at around $46 billion. And the return to equity, here we are at 18%. The segments they're looking at is investment banking, and they're up 12% at 2.2 billion. The markets division is up 21%. The trading division is also up 3.8 billion, which is 48%. And the free cash flow for this quarter is at $4.37 billion. And their debt equity is much higher than Wells Fargo. They are 2.79, but their interest coverage is very strong. Do they have red flags? Of course, the same red flags they share. They don't have the scandal red flag, but they have the uncertainty when it comes to interest rates. But the problem for JP Morgan Chase is the credit card division, and questions are being asked about the credit quality to the cards which are being issued. That is something to keep an eye on. In terms of metrics, the PE is at 12.79 and the price to book is much higher at 2.19. The PEG ratio is also much higher at 3.97, which shows the market is already priced that in, the growth. But if you look at all these metrics, they're still considered to be fairly priced, fair value. So let's now talk about discounted cash flow comparison and intrinsic value comparison between both the banks and their current price. Wells Fargo is at $72, while JP Morgan is $260. The discounted cash flow of Wells Fargo is 109, while JP Morgan is 303. The relative value of Wells Fargo is 75, while JP Morgan is at 216. The intrinsic value is at 92 for Wells Fargo, which is much higher than their current price at 72, while JP Morgan's intrinsic value puts them at $260, which is where they're priced at. So, should we be considering this bank? Well, over the past 5 years, both banks have been trading below value, intrinsic value, at an average of 49% for Wells Fargo, 49% below intrinsic value, and 44% for JP Morgan. So both banks are currently trading much higher than their historical averages compared to intrinsic value. So this where is the question. Yes, if you look at it in terms of intrinsic value, discounted cash flow and all that, they are very cheap compared to where they should be. But if you look at the 5-year average, they have not really moved above their intrinsic value for a very long time. They've always been traded at a discount. So should you be considering them, the amount of volatility in the market, or should you be waiting for a better price correction before you think of these two companies or these two banks? I would love to hear your opinion about these two. Please let me know below. What do you think? Are these two banks in your watch list? Have you considered them in the past? Have you never looked at them? Or is it something which you're not interested in? I would love to hear your thoughts. Thank you for watching Be Rich today. I hope you had a wonderful weekend, or start of the weekend at least. For those of you who are working on Saturday, I hope Sunday is a rest day for you and you manage to recuperate and recover. Thanks for being with me on Be Rich today. I'll see you tomorrow with another two companies. Good night.